Welcome back. Well, a recent report by KPMG and Chainalysis, that's a blockchain research company, titled Crypto Risk and Opportunities in Nigeria, a New Banking Paradigm, provides an in-depth analysis of the rapidly evolving landscape of cryptocurrency in Nigeria. As digital assets continue to gain traction globally, Nigeria's unique position as one of Africa's largest and most active crypto markets presents both significant risk and promising opportunities. The report delves into the risk associated with crypto adoption, including regulatory challenges, security concerns, and the potential for illicit activities, while also highlighting the transformative potential of cryptocurrencies in reshaping Nigeria's banking and financial systems. Well, joining us to discuss now, we have Mr. Oluwaseun Odek, who is a partner, lead regulatory compliance at KPMG Nigeria. We also have Arushi Goel, head policy, Middle East and Africa for Chainalysis. Thank you both for joining us today. All right.
Thank you for having us.
Thank you. All right, let me start with you, Mr. Oluwaseun Odek. Definitely, we know when people hear cryptocurrency, they most of the time risk, comes to mind, and there's also that underlying technology there, which is blockchain. And we see your firm is urging financial institutions in Nigeria to, adopt blockchain technology and also collaborate with crypto firms to unlock the potential of digital finance. So are the benefits outweighing the risk here, or are they somehow at par?
Thank you very much. I think when we look at the data that we have in the report, $59 billion being traded in Nigeria, I think the data speaks for itself. The volume is huge. And therefore, this is something that we have to consider and look at how we can make the most of it. So whether we choose to adopt these blockchain technologies within a banking ecosystem or not, I think these transactions will continue to go on. So we think it's in the best interest of the entire system to look at opportunities that we can use to collaborate and use blockchain technology as well as trade crypto, so that we can create a lot more transparency in financial transactions. Right now, those $59 million, most of it is it's opaque. You can't really see the beneficiaries of these transactions. You don't know what they're for. And so maybe bringing them into the same financial system will help to better understand the flow of transactions, to better understand, the direction of travel of cash flow. And it will also bring in all those involved in it into the financial services system. And then you can get more data. You can require for more KYC. You can request for more KYC, and then also just root out the bad actors that are participating in this space. I think the blockchain technology in itself, it's immutable. You cannot change the data. It's in a public ledger. That kind of technology is very beneficial, especially when you're trying to fight financial crime. You can basically trace and track transactions as they flow. You can isolate transactions that have been linked to bad actors or that have been linked to fraud. And therefore, you also, that kind of helps the financial system better, in the sense that you have a saner financial system. It doesn't come without its risk. There's certain risk, but I think with proper risk management, like has been done in other jurisdictions, I think we can manage those risks that are there in the use of crypto and blockchain technology.
Right, thanks for that. And let me take it to Arushi Goel now. She's head policy, Middle East and Africa for Chainalysis. So, definitely risk, you try to mitigate risk as much as possible as any, business entity. Talk to me about how banks are mitigating most of these risks, in the financial services system, and this time from a global policy perspective. How are they navigating all of this? That's from the banks.
Thank you for that question. I mean, it's a very pertinent question in today's environment, right? So as crypto has grown, a very important part of that crypto ecosystem is banking services. right? All your exchanges and other service providers, they need banking services for very baseline requirements like paying salaries or paying rent, etc. But they also sometimes need banking services for client money accounts to settle transactions when they're off-ramping or on-ramping into the crypto ecosystem. But traditionally, the banking side of the ecosystem has actually de-risked itself by not providing those services to the crypto ecosystem, partly because of the lack of regulatory clarity, and sometimes partly also because of lack of sufficient capacity in understanding what those risks look like and how to kind of manage or mitigate them. Luckily, like you mentioned, how the global policy is moving, we are seeing a shift, a very positive shift, which is banks, regulators, and even the global standard setting bodies are realizing that we cannot just ban crypto exchanges or crypto from our jurisdiction. We need a sufficient oversight over these players to be able to manage that risk. So really, we're moving from de-risking to risk management and mitigation. In terms of how banks are doing it, it's really, through the use of blockchain analytics, right? What blockchain provides is a level of auditability and traceability that is simply not possible in traditional finance. Because in a blockchain, you're not just looking at your direct counterparty, but you can look at the parties a number of hops down the line, where the transaction originated, who all did it touch in between, where is it finally culminating. All of that is visible on a blockchain. You can have almost real-time monitoring capabilities when it comes to crypto. And that's where banks have a lot to benefit by actually leveraging the same technology from which they've been hesitant so far to kind of understand what their exposure is. And also there's a bit of a nuance there, is understand the exposure, but also understand what part of that exposure is risky and what part of that exposure is not risky, because that will really help define the rules of the game for the industry and eventually help everyone thrive responsibly.
We know the crypto industry is one that's plagued with a lot of scams. Looking at crypto scam revenue, that's according to your report, you see rug pulls accounted for about 4%, pig butchering 33.2%, high yield investment trading scams about 50.2%. Then we have other types like the crypto drainer, address poisoning. So looking at that's a lot of scam revenue, about $10 billion in 2024, and your report also says it could be more. So it seems it'll be quite tough, to get banks to actually partner with some of these crypto firms. What do you think, Arushi?
Yeah, thanks for highlighting that data. I think typically there's a very negative sentiment attached to the sector, but if you really look down at the data, once you start to dig deeper, it's really not as bad. Let me clarify. We research on crypto crime every year, and almost every year for the past couple of years, what we've seen is that consistently, crypto crime has actually been less than 1% of all crypto activity. So really, 99% of all crypto activity is not illicit. It's just the 1%. Even though it's a fairly large number, last year in 2024, we estimated this activity to be in the ballpark of about, I think, $45 billion, right? It's still a large number, which is why the need for appropriate risk management tools. When it comes to scams, it's a persistent issue. It's a growing issue. Like you said, $10 billion being received by scam addresses. This is a lower bound estimate. We will likely revise this number upwards in the coming year. 80% of those scams are investment scams and pig butchering scams. And we are also seeing AI, for example, emerging as a threat vector when it comes to scam activity. So all of this eventually tells us that banks, financial institutions, and the regular users are already exposed to some level of criminal activity when it comes to crypto. So having the right guardrails where legitimate businesses have a platform to flourish, where users have access to regulated exchanges, for example, where there's appropriate data collection from the bank side as well as from the regulator side. So once we have that ecosystem starting to build out, also on the law enforcement side, being able to coordinate between regulators and law enforcement so that if there is a complaint, it's kind of acted upon as quickly as possible. Within crypto, speed is of utmost importance. So being able to, in a fast and effective fashion, cater to some of these activities is where the transparency of the blockchain is highly, highly useful.
All right, thank you for that. But let me come to Mr. Oluwaseun Odeko now. So looking at the data there, we see Nigeria leads most of sub-Saharan Africa when it comes to countries by crypto volume. So definitely there's adoption there. And we've had, from the CBN, that's the previous leadership in the CBN, banned banks, from carrying out crypto transactions, but we still see adoption, growing, from then even up till now. What do you think is driving that?
Okay, thank you very much. I think a lot of it is being led by people looking for alternative systems to carry out financial transactions. There are quite a lot of restrictions with inter-country transfers. Crypto kind of reduces those restrictions. When opening domiciliary accounts, there's a number of KYC requirements. A lot of the crypto exchanges don't have similar restrictions. And so you see that naturally people are gravitating towards that. I think there's also the macroeconomic issues that we've had in the country. Over the last year or thereabout, people are looking for alternative store of value for their assets. And then you also have the inbound remittances. One of the things you see is with the traditional money transfer system, especially for inbound transfers into Nigeria, there are certain jurisdictions that are, due to the different sanctions regimes, are unable to enjoy that traditional money transfer system. They then revert to crypto. If I'm to take countries like Russia that has been sanctioned heavily, you can imagine a Nigerian who is in Russia, who is trying to send money to their family in Nigeria. They will most likely just lean towards using crypto because of the sanctions restrictions that they may face. You also see the cross-border transactions, especially within Africa. There are typically a lot of issues when you're trying to buy from someone in another jurisdiction in Africa and you want to transfer those funds. It can be very expensive. Crypto provides an alternative for citizens of those countries to transfer value. I think there's also the investment side to it that's been appreciating. It's appreciated for a bit. It's also depreciated for a bit. So you also see that people use it to store value, it's just it's almost people find it more convenient, so to say, and I think that kind of also supports the argument. That the earlier it's regulated, the better, because we then begin to see a lot of the transactions that are currently happening outside of the system that are not properly captured. Then those are captured in the regulated space. Proper KYC is enforced. That can lead to better transaction monitoring. That can even lead to better identification of bad actors. And that can also be a good source of revenue for the government. For example, in South Africa, there's the crypto tax that you get on the gains on crypto. That is, as you know, the country is also looking for revenue sources. I can imagine the level of appreciation in assets, in virtual assets held by people that have gone untaxed over the years. So Those are ways. I think it's just a convenient environment for people to do transactions, especially cross-border transactions. It helps to eliminate a lot of the limitations you have with the traditional banking system.
On some of those crypto transactions and crypto gains, do you think that might dissuade, the players, in that market? That might be something they won't be happy about, getting some of their gains taxed. Do you think that might push them away?
Well, I think when you look at the volumes, we're in sub-Saharan Africa, Nigeria is clearly way ahead of everybody. So the volumes have been consistent, and the #1 spot in Africa has been consistent over the years. So I don't think it will dissuade people. I think just creating a regulated environment will bring a lot of intelligence to both the regulators and as well as the regulated. It brings a lot more people into the tax net. I think it will help. I don't think it will dissuade people from doing transactions on crypto.
All right, so Arushi, definitely we're seeing technology, moving at a fast pace, so far. What are you seeing in the next, 5 to 10 years for blockchain adoption with financial services and most of these banks?
Yeah, I think 5 to 10 years is way too long a horizon to be able to calculate at this time. But generally speaking, in terms of trends, we are obviously seeing crypto adoption on the rise since the last few years, and we expect that trend to continue. What's probably going to be more positive is the fact that we have somewhat more clarity in terms of how the policy environment could look like when it comes to especially the likes of centralized exchanges and those kind of service providers, which is leading to a safer environment for the users. So that's definitely something we are going to continue to watch. Just like any other sector, just like with the traditional financial sector, as the adoption grows, so does the possibilities of more kind of crypto criminal activities. And therefore, that's where we see a lot of technological innovation take place, right? For example, right now, we are a lot more focused on the compliance and then kind of being reactive to when a certain criminal activity takes place. But we expect the technology to move in a way that we are not just reacting, but we are being more proactive and preventive in nature, which is being able to understand suspicious patterns so that we can take action even before some of these criminal activities take place.
All right.
And of course, AI will continue to have a role as all of these.
We definitely cannot escape AI at this point with most of the conversation. But thank you so much, you both, as Oluwaseun Odeku, who is a partner lead regulatory compliance at KPMG Nigeria. And we also had Arushi Goel, head policy, Middle East and Africa chain analysis. Thank you both for coming on today.